there are a lot of costs of having children, not least of which is childcare and the cost of complying with the tax requirements of childcare. Let me first tell you what not to do, then Thisha can tell you what to do. What you should not do is what happened to my daughter this last summer. She was hired as a nanny and took care of a few kids for a local family for most of the summer. She made several $1,000s, and then we start talking about taxes last month, and I asked her how much she made. She doesn't know how much she made. Did she get any tax forms from the employer? No, no tax forms from the employer. Basically, they were treating her like she was the Friday night babysitter. Well, that works fine for the Friday night babysitter. It does not work fine for your full-time nanny. The IRS draws a line at $2,300 a year. If you are paying a household employee, which is what a nanny is, more than $2,300 in the year, you got to treat them like a real employee, right? You got to do I-9s, you got to do W-2s, W-3s, W-4s, you got to send them tax forms. Because what happens is when they go to file their taxes, they're faced with the dilemma that my daughter has right now. The dilemma is, do I not report this income, or do I do what the IRS wants me to do, which is report the income, say I didn't get a W-2 I should have gotten, and throw you under the bus for not paying applicable payroll taxes. So don't put your nanny in that sort of a situation. Don't put any sort of household employee in that situation. Actually comply with the laws and do what you're supposed to do and keep everybody out of trouble. Thisha, you want to talk to them a little bit about what they're supposed to do and some of the easy ways to do it?
Absolutely. Yeah. So nannies are considered household employees, which is not independent contractors. So because you are basically employing this person for most of their time, you're now an employer. And as an employer, you must pay the Social Security, Medicare, and federal and state unemployment taxes on the wages paid to that employee. So, and also remember that each state has their own rules, so there might be some state level taxes. So, if you're going to do this yourself, there are a few services that will help you with it. Nanny Checks does it for $6 for a weekly paycheck. They charge $6.25 plus $80 a quarter for quarterly filings and $150 at the end of the year. So basically, that comes out to about $66 a month. Care.com does it for about $75 a month. We had a guest post by Dr. Astrid Moisey on the White Coat Investor called Financial Costs of Childcare. And if you want the details on that, she's got it all laid out for you. So basically, you're going to be needing to pay all these taxes upfront. And then, like Jim said, providing them with tax forms at the end of the year as well. So that's one way to do it. Nannychecks or care.com sounds like a good option. Of course, you could also consider maybe hiring an au pair. A lot of physician families with dual physicians, two physicians, have good luck with au pairs because they're available to you at all times, with changing schedules, with changing calls. Sometimes nanny schedules don't work out, but an au pair is basically you sponsor someone to come live with you in your house for a year. Usually, you are also required to provide them with a car and accommodations. So if you have an extra room in your house and you can get someone to come live with you, that would obviously be ideal and actually turns out to be pretty cost effective as well. The annual cost of having an au pair is about $19,000 plus the car and the accommodations. And there are different companies out there that will do that for you. So that might be a good option for you. And of course, there's center-based and daycares and in-home daycares, which are a little bit more expensive.
Yeah, I think most people are probably going to center-based, childcare, but that doesn't work very well for doctors, right? When you get called into the
No.
hospital, or you're working night shifts, or evening shifts, or weekend shifts, a lot of these places are closed. They're like 8 to 5 operations Monday through Friday. This was a huge issue I remember for one of my residency classmates, right? She was an ICU nurse. I think she worked nights. He was an emergency medicine resident. No center-based daycare was going to work for them. And so they actually ended
Right.
up paying my wife to watch their kid, and it was good. She was about the age of Whitney, and so they hung out together. They were good friends, and but that was the only
Nice.
sort of a thing that would work for them. They could not have done anything that was standard for standard employees who work bankers' hours.
Right. Yeah. We're lucky because my husband works from home and then we moved close to his family so they could help out when there's like, one of us has to work or we both have to work and the daycare is closed because of COVID, and all this stuff. And it definitely, childcare hours and center based hours really restrict a lot of parents and make it quite impossible for dual physician couples. So, yeah, nannies or au pairs would probably be a great option for those kind of dual physician families.
Now, the government knows this is expensive stuff. I mean, imagine you're the average household making 55 or $60,000 a year, and you're looking at costs of 20,000, 30,000, 33,000. To watch your kids. That doesn't work very well. So the government has done a few things to kind of help with the cost. You want to talk a little bit about some of those tax breaks that come for childcare?
Yeah, so there's 2 different options, and they've recently been really beefed up because of COVID, which is really awesome for families. So the first option you have is a dependent care FSA. Of course, that's not guaranteed. Generally that's employer sponsored. So if your employer has this option, this is a really good option for higher income families. The other option is child tax credit. The child tax credit was actually paid out in increments during COVID. So the important thing to remember about that is the child tax credit is something that you opt into, but you can't use the dependent care FSA money for the same stuff that you're getting the child tax credit for. So you can't use both of them for the same amount of dollar expense. But thankfully, we all have so much childcare expense most of the time that we can utilize anything that we get. The dependent care FSA basically lets you use pre-tax income and bypass Social Security and Medicare tax, and pay for child expenses with your pre-tax income. So it decreases your taxable income, which is awesome. And because of COVID, the American Rescue Plan actually increased the contribution that you can put into a dependent care FSA from a $5,000 max per year to $10,500 per year. And they actually made it so that it could roll over. Whereas before in a dependent care FSA, it was either use it or lose it kind of situation. Because of COVID, you can roll over those funds. You can almost get $15,500 pre-tax for childcare this year. And the child tax credit, which used to be a pretty bad deal for high earners because it maxed out at 20%. So it's phased out because of AGI, your adjusted gross income. So the higher your adjusted gross income, the less child tax credit you get. But because of the American Rescue Plan, it has increased the benefit from about $1,000 to you to up to $4,000 per child for one child and $8,000 for two or more children. So these are really important tax benefits to be aware of if you do have kids, and make sure you do utilize it. The important thing to know about a dependent care FSA is that you can have it even if you have an HSA. A lot of times you can't have HSA medical and a medical FSA, but you can have a medical HSA and a dependent care FSA together.
Yeah, that child tax credit was a bit of a change. I mean, it used to be almost no docs qualified for it. Now many docs qualify for it. The phase out starts for a head of household, which if you're a single parent, you're probably filing head of household. Starts phasing out at 112,500 of income. All right, so most docs are going to be above that. But if you are married, it starts at 150,000. Married filing jointly starts at 150,000, but goes all the way to 400,000 before you're completely phased out of it. So lots of docs can get their AGI below 400,000. Probably the majority of docs. I think the average physician income, not the average physician household, but the average physician income is 275 right now. So lots of docs are going to be under that $400,000 limit and be able to get some sort of a child tax credit, which I know how much kids cost, and the tax credit doesn't come anywhere close to paying for them, but it helps. Every little bit helps, and so if you qualify for that, make sure you're getting that when you file your taxes. But mostly, it just costs a lot to pay for kids, And the funny thing is, everyone thinks, "Oh, it's crazy paying for childcare. I can't believe how expensive childcare is." Well, guess what? It doesn't get any better. They just keep becoming more and more expensive as time goes on. All of a sudden now you're paying for private school, or you're paying for college, or you're getting them a car, or they start eating more. Have you ever fed teenage boys? They're not exactly skimpy on their portions. This expense doesn't really go away until they're out of college, to be honest with you. So get
Yeah,
used
I
to it,
feel
I
like it just
guess. Kids are
shifts.
expensive. Yeah,
Yeah,
exactly.
yeah. At least with the daycare expenses, it is somewhat subsidized by the government with these tax benefits, so you might as well use them while you can. The hosts of the White Coat Investor podcast are not licensed accountants, attorneys, or financial advisors. This podcast is free entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.